You were listening to ChartingWealth.com for Tuesday, the 25th of July, 2017. How do you guys like the Bitcoin chart we provided to you this last week? Pretty cool, isn't it? Along with that training. If you've not already received it, please go ahead and sign up for our daily market review at ChartingWealth.com, and we will make it available to you. Let's jump right into these charts today. What do we see going on with the S&P 500? Down just a little bit for the day, 0.02%. The Q's up 0.46%. That's, of course, the Nasdaq 100. We see that TLT bonds are down 0.39%, and gold is up. Everything a little mixed. Let's jump first into the S&P 500. We look at our weekly chart. We see that the weekly chart is trying its best to cross over going up, but just hasn't quite done it yet. We still have the weekly chart down. We have the two-day chart up. As we plug into that a little deeper, we can see that it has continued to move up. That latest candle that is forming on the two-day chart so far is negative. And again, we'll continue to monitor these things as we move along. We need to change up our trend line just a little bit when it comes to the two-day chart. And in fact, the down movement is right there laying on that two-day chart as far as the two-day trend line goes. Again, just a little bit of a down day. Derivative oscillator still moving up, and the price percent oscillator. So we still have up movement. Now, don't forget, if we do have that two-day chart rotate over going down, we still have the weekly in a confirmed down move so far, although just slight. So depending on how things go, we'll either have the weekly turn and start moving up, then we'll have a weekly vertical crossover at the end of this week and the potential to jump in next Monday on up moves, or we will have the two-day chart crossover going down, and then we'll have a potential down move again. But again, remember, this is the summertime trading zone, the worst time of year to trade, the most difficult time because of the lackadaisical markets. What do we also know after July expiration? The market is prone to very wild swings. And again, we refer you as always to the book that we urge everyone to buy every single year. It's still not too late to have your own 2017 edition of the Stock Traders Almanac. We refer to it on a daily basis. It shows you all the historic moves. It's put out by Yale and Steve Hirsch, and you have got, Jeffrey Hirsch, forgive me, you have got to have a copy of it. We love it, and we follow them constantly. Okay, that's where we are on the S&P 500. Don't have a trade there yet. Still be looking for one. Let's go to the Qs, up 0.46% for the day. That's 0.46%. Trying to cross over going up, hasn't done so yet. Derivative oscillator still in the negative on the weekly chart. As we hone into that two-day chart, what do we see? The two-day chart continues to move up. We do need to change over just a little bit. We have to tweak out our trend line, and that's what I'm redrawing now for those who are watching, not just listening. And again, our movement, we're connecting really, what is that, about 4 two-day candles moving up. So strong up movement continues in the Qs. Not enough yet to cross over the weekly chart, but that may happen before the week's out. Again, we will let you know as the week ends whether or not we have a weekly vertical crossover going up. We will keep you apprised of what's happening, but no trade at this point. Remember, we are trend followers. We are not forecasters. We don't have Ouija boards. We don't have crystal balls. We wait for the trend to be set. Then we look to jump in. Okay, let's go to TLT, the 20-year bond fund. It is still in a confirmed up move on the weekly chart. We have, and so again, we do see, however, that as the week has started off, the derivative oscillator has rotated over to the negative. Now again, we like everything when the charts are going up to be going the right way. When the derivative oscillator flips over to the negative and the price percent oscillator is still in the positive, that gives us some cause for concern. We have our second week forming of up movements as far as candlesticks go. As we delve in a little deeper into that 2-day chart, what do we see? It's still in a confirmed move going down. If it does cross over going up, then of course we would look for a potential up trade because we have breached that 2-day trend line. No recovering that at this point. So we'll continue to watch. Derivative oscillators losing its energy. Price percent oscillators not crossed over going up yet. When it does, we will let you know. Then we will start looking for potential entry points into an up trade, with the caveat that the weekly chart has the derivative oscillator in the negative, but that's just the first day of the week. That may change as we move throughout the course of the week. Lastly, we're going to go to gold. Gold up 0.04% for the day, just barely 0.4%. What do we see going on there? Well, the weekly chart is in a confirmed down move. Derivative oscillators losing downward momentum, trying to head up. Again, that's where we are on the weekly, confirmed down move on the weekly. As we look at the 2-day chart, what do we see? Well, of course, it has crossed over during the course of the day going up. So we shall, of course, note that on the 2-day chart. And we will also rotate our arrow over, how we keep up with those things visually. Again, visual seeing things is very important in the charts. We are made as human beings to see things, to catch things, to pay attention to those things. That's why we use so many graphical representations in what we do. It helps use all of our intellect. And we see that, of course, the 2-day chart has rotated over going up. And of course, what does that mean? Well, with the weekly chart going down, we don't technically have a trade there. But again, what's the special thing about gold? Gold is the one do-it-all, make-it-all work chart is, of course, our 4-hour chart. It works for everything in gold except in about mid to late December until about mid-January. It seems to stop working. Has worked beautifully this time, rotated over going up somewhere around 116. If you would have used this 4-hour chart only, it has, of course, gone from that all the way up. I guess it topped out on Monday morning somewhere around 119.58. So that's beautiful. Rolled off a little bit there by the end of the day. So again, that's where we are as we end the day on Monday. We continue to watch this week. Again, expect some wild swings after expiration Friday in July, which happened, of course, as we see these things moving forward, we just want to realize those things will be affecting the markets as we move along. That's where we are, folks. We always appreciate to hear from you. If questions, problems, concerns, all you got to do is write us cw@chartingwealth.com. God bless. All the best from your friends here. Take care.